Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 17th, 2007. Well, Monday has come and gone in the markets, and tomorrow we await the Fed rate decision. It's widely expected that it's going to be a quarter basis point cut in the Fed funds rate, upwards of half a basis point cut in the Fed funds rate. And it's going to be very interesting to note this, guys, okay? And depending on what the Fed does, the market will react differently, obviously. There could be a near-term spike up. We usually say the first move is wrong in this market, whichever way it goes first, and then we spike the other way. But that's in the near term. Looking over the course of things, we're still making that head and shoulder pattern, which I want to focus in on today, on the daily chart. And you guys can see this head and shoulder pattern here quite nicely. And today's close on this ES chart, daily chart, and the same with the NASDAQ, holds true to that head and shoulders. But first, let's talk a little bit about what the markets did today. The Dow was down about 39 points today, while the NASDAQ closed down about 20.5, while the S&P was down 7.6. Now, what caused us to go down more? Because overall, you guys know how we talk about how light volume in the markets, which today was, by the way, light volume will cause a general flat day in the markets to positive trading. And we did see, for the most part, light trading in this market, but the market was down a little bit. The Dow was not down much, down 39 points, and the Dow is nothing. However, the NASDAQ did show some weakness today, and that could be because of it's been a leading mover here. And again, we saw when the markets first rallied off of August 16th's low, the NASDAQ took charge, rallying up the most. And I'm just going to show you that chart. Notice how this head and shoulders is very even here. You have an even chart right here, even shoulder, nice little head here, and a nice shoulder about even from the other side. Slightly higher, but even. However, look at the NASDAQ. This shoulder is much lower than this shoulder. And again, I think that's what you're seeing here. So you're seeing a possible leading indicator here in the NASDAQ. But what happened to cause us to drop today, guys? Why were we negative today on light volume when normally light volume gives us a positive? Well, what it was Northern Rock in England, one of the leading banks and mortgage lenders, had been bailed out by the Bank of England last Friday, I think. I believe it was Friday. It was either Thursday or Friday of last week. In any case, today what we saw that stock down more than 40% again today over there based on bank runs. And those of you guys that know a little history, especially around the Depression, know that bank runs are a big deal. That's where everyone goes to that bank because they think it's going under or going out of business, and they withdraw all their money. And there were literally lines and lines outside of this bank today of people withdrawing up to $4 billion in assets. Okay? Now, that obviously shook the markets a little bit because, if we could only imagine here what would happen if that were to happen across the United States in multiple banks. You would have lines everywhere. Basically, it would be the beginning of a major, major crisis. When citizens of a country lose the ability to trust one of their financial institutions, namely banks, because they think they won't get their money back, that causes mass panic and hysteria and can lead to some major, major issues here, okay, guys? So again, it's nothing that's affecting this market, this country directly, but in turn, it kind of scared the markets a little bit. In addition, after hours today, E-Trade came out and said they're lowering their estimates for 2007 by 30%, and they're dropping their mortgage lending section of the company. And again, lowering estimates dramatically, and that's purely based on the mortgage crisis that's occurring right now and how many losses they've taken. So this isn't done by any stretch, and we're going to see starting tomorrow when Lehman reports. The financials report this week, and it's going to be extremely key to understand these financial reports by these financial firms to understand how bad are things here. Now, in my personal opinion, I think for the most part, Lehman and the rest of Morgan Stanley and Goldman Sachs and all these are going to be able to cover up some of these losses at this stage of the game. They have a lot of cash on the books. They're going to be able to make things probably look a little better than they are. The real key is going to come in guidance and the coming quarters, in my opinion. All right, so it's very key to follow these tomorrow. Again, Lehman kicks things off tomorrow before the bell, and then again at 2:15 p.m. Eastern Standard Time. And again, us sitting in New York here trading in the intraday stock chat, we'll be right on top of things. So I encourage anyone out there that wants to be on this and really understand the markets and the Fed, please come out and join the intraday stock chat. It is a great product. Phenomenal subscriber services. We have a ball in there, so much fun with everyone, and we make money, and overall it's just great. Again, come join us. Come join the Swing Trade Alerts. And also, again, I mentioned this on Friday. We're debuting our apprentice webinar. If you want to learn how to read candlesticks, if you want to learn how to read technicals, if you want to understand patterns, this is where you have to come and sign up. It is going to be the best webinar out there, in my opinion. You do it from the comfort of your house or your computer. You'll hear us on the speakers as we do a slideshow and talk about all charts. Questions and answers will be taken care of, and it's just going to be overall a phenomenal webinar. Come join again. That you can sign up for those at inthemoneystocks.com. Okay, now we covered why the markets dropped a little today. And we talked about E-Trade now after the bell coming out. And I don't think E-Trade will have a big impact on the markets until 2:15 tomorrow when the Fed comes out. That's going to be the driver here, guys. We'll have some volume coming in early in the day just because of the open. But right away, probably by 10:30, things will go to a snail's crawl. A snail's pace going into 2:15 where a massive amount of volume will come in. And the market could start move up or it could move down. This is the two scenarios I'm going to set up. And again, notice the head and shoulders pattern here. Let me get out my trend tools. So we can all really, because this is what it's all coming down to, guys, tomorrow. This is probably one of the most awaited Fed meetings in years, at least in 4 years, if not more. All right, and you're talking about a crisis that Greenspan has mirrored as crisis to 1987. We've thought it's more been about 1907, the panic of 1907. Those of you guys that are interested, go Google. It's a lot more like what's going on here than 87. Okay, we have our head and shoulders pattern right here, shoulder over here. A nice longer shoulder, I should say. A nice size shoulder, nice head right here, and a shoulder over here. What you're going to basically look for here is a close below this low. So you close below this line right here, and again, look at how it's going to coincide with the 20 moving average, or close below the 20, which, by the way, since over here we haven't had, so we tested it here, and it looks like we're testing it again, but until we close below that, we're not going to really get a big move down. So this is a line to watch for a close below. Now, what we're going to see here, guys, is there's two scenarios. Scenario 1, the Fed does something with rates. We don't really care what. It's all in the reaction, all right? The Fed could do whatever they want. It's all in how the market reacts to it and the psychology behind it. Now, if the Fed does something and the markets rally here, we're going to see a move up, but it's going to be a short-lived move up for the most part. What you might get is another test right up here at about the top of the shoulder, but overall, you're coming into a lot of resistance now. We're making resistance points all along here, all right? Right down to here, and you can notice this triangle that we formed now. Triangles can be a break to the positive side or to the negative side. And again, if we break to the negative, it's going to be a big drop. But breaking to the positive probably only gives us a move up to about this double top area. All right? And again, we'll reevaluate as we go. But should the market move out of this range here, again, if the market reacts negatively to the Fed, it's very possible that the market will be saved because options expiration is Friday, guys. And that's so key to remember. Keep in mind what happened last options expiration. Thursday we had that ginormous drop, a rally late in the day, and then the Fed came out on Friday and rallied this market up. All right, everyone that bought puts got screwed there. All right, now again, this always seems to happen because big money controls the puts and the options and the calls and all that stuff. So what we're saying here is even if it looks like we're going to dump out here, you got to be a little careful going into Friday, and we wouldn't be surprised if this market does happen to hold pat right around this area, continuing to make this nice shoulder here. We might spike up a little, but overall we're probably staying in this triangle. All right, we'll watch very closely. So again, it wouldn't surprise us to see a rally up. However, the overall bias in looking at a week-to-month pattern is on the downside. And I want to show you guys something, all right? Now again, on the downside, meaning that even if we trade sideways to up here on Fed news, on Fed speak here, eventually we think that the market's telling us here that we're going to drop. And this is only because, or one of the reasons, because here we've had light volume in this whole up move. This whole up move ever since here has been minuscule. And I'm going to show you the ES chart pattern here. Look at this, all right? What we'll have to do here is flip over to the intraday. And again, this is the intraday, but I'm going to show you the SPYs here. Look at the SPYs on the daily. All right, here's the drop from here to here was where the Fed came out, right here on this day. And we'll draw a line right there. So we take the volume from here to here. Look at the size of that volume. Then we take the rally, this whole rally, and look at this here. Do you guys? I'm sure you guys see this here, and this is a humongous thing to keep watch of. And this volume differential is just astronomical. So, anyways, what we're saying here is that here's our head and shoulders again, and this has been the whole move up. So we're moving up on light volume, but we're making a bearish chart pattern. All right, and again on the SPYs, you're going to look for this break right here. That's the trend line break, and you can see how I'm connecting those two armpits, if you would. Those would be the armpits, kind of the shoulder. And it's just going to be very interesting to watch here. But what, again, we're saying is that We're right here between the 50 and the 20 on most indexes. And going into options X, you have to be very careful. They've screwed us over before with these crazy moves, and it's likely they'll do it again. So be aware that if you're going to take a short position in tomorrow's Fed meeting, you might be in for a little heartache in the near term. In the near term, it's possible. However, should they not even care at this point, if volume comes in here to the strong side, if volume comes back into this market, it's going to be to the downside. So we will keep watch of this, guys, and keep you guys all posted. Flipping back to the ES chart, the S&P futures here, guys, it was a pretty choppy day, but overall, as we talked about, based on Northern Rock, it caused us to have a down day, a down bias day, even on light volume. And again, tomorrow, be very careful. It's going to be wild. Join the intraday stock chat, guys. This is going to be huge going into the Fed meeting. Got to be in that chat room and understand exactly what's going on, the technical setups and everything. And we'll do the best we can to make a large chunk of money tomorrow on this volatility. Have a wonderful day, guys, a wonderful evening, and we'll be back tomorrow with a new video talking about what happened with the Fed. Talk to you soon.